So today I wanted to talk to you about the VA funding fee. The VA funding fee is something I get questions on every single day. I get well, I was told by another lender that VA is so expensive it doesn't make sense. Or there was actually a really popular financial expert that recently came out and said, do not do a VA loan no matter what. No matter what? Okay, this is someone who clearly does not do VA loans or understand VA loans. So the first thing is that if you're exempt from the funding fee, VA is one of the least expensive loans you can do. Okay, it's the funding fee where all of this misinformation lies. So today I wanted to do a very simple conventional versus VA, 5% down. Okay, so let's hope you can read this. I took it outside today so you could. Okay. So in this scenario, it's a $200,000 purchase with a 680 credit score. This is something I see every single day. The VA, you've got your first time use funding fee of 2.3%. That increases the loan amount to $204,600 because the funding fee is rolled into the loan. Okay. Interest rates, I pulled interest rates and it was at 2.75 for this scenario on a 30-year fixed mortgage. That would make the principal and interest $835.26. So the total principal and interest monthly, $835.26. There's no mortgage insurance. That's the beautiful thing about VA. The rates are really low and there's no mortgage insurance. If you're talking to a lender where their conventional rates are lower than VA, something's wrong. They're one of those lenders I talk about in my videos that are padding. And if you haven't seen my VA loan scam videos, please watch those because it's outrageous. And I am so sick of people charging veterans and active duty too much. Okay, so let's go to conventional. So conventional 5% down. You're taking $10K of your own money to do this. And that's going to give you a loan amount of $190. Okay, I ran interest rates and it was at 3.5% on a 30-year fix, which is really good for a 680 credit score. Okay, that puts the principal and interest at $853.18. So just right here, even though you put down, your own money and the loan amount's lower, that interest rate difference right there is making it so that your principal and interest payment is more expensive than if you just do the VA with zero down. Well, with a conventional mortgage, you're also going to have mortgage insurance. So now you've got mortgage insurance based off of this credit score at $125 a month. So that puts your total payment at $978.18. Yeah, $835.26 versus $978.18. And this is with you putting your own money in the jar. So a couple important things to note. With VA, if you put more money down, the funding fee does decrease. So if you took this 5% and you put it over here, you could have the lower loan amount, but you're going to have a 1.65% funding fee instead of 2.3%. So that's a great way where if you really want to use your money, to use VA, still use your money and get the best of all worlds. Okay. Now I did do an amortization chart on both of these loans just for argument's sake. And I did not take into consideration the mortgage insurance of $125 a month, which is a lot. It's a lot. And what I found is that between these two loans, if you take this loan amount and this loan amount and that rate, this one saves you $21,000 over the life of the loan. Yeah, in interest. Just in interest. So I hope this has been helpful. If someone's telling you don't use your VA loan, please call me. I'm licensed in 37 states. I love VA loans and I hate it when people don't use it because someone gave them bad information. So I'm going to do more of these kind of VA versus, or, and sometimes VA is going to lose. But in this case of the borrower with the 680 credit score with 5% down, winner. Winner. So I hope this has been helpful and I hope you've been able to see it. Thanks for watching.